a pleasure to have everybody in here. I'm very grateful to have taken the time to show up and a little listening on what we do over here. So I want to do today's webinar on how to trade today's market. So one of the things that you guys will see with every single market is themes. So I've been trading a good chunk of my life now, and the setups I trade and the things I do are all really similar. But every single market has themes, things that are better than others. Okay? Every single year it's something a little bit different in terms of the patterns that may work, the setups and the conditions that those patterns may work in, broad general themes of what kind of market. That's the hugest part, right? Because as traders, we're only as good as the stocks we trade, right? You could have the best patterns around, right? If you're in the wrong stock and you have the best pattern around, it's just not going to work. You're only as good as you trade. And so understanding the themes that are going will help take your results to a different spot. In trading, there's a very, very thin line between a little bit of money and somebody that's actually making money. And there's even a thinner line from a trader that's pretty good to a trader that's great. It's a game of inches, literally, in trading, because a couple mess ups here and there and you always lose. And so understanding a few of these, you take level. And this is some of the stuff that really has helped me this year, but especially in the last couple months. I've attained a very good consistency in what I do, and a lot of that comes from being able to do the same things over and over. And this is the stuff that I do every day for my my boot camp students. For my 60-day boot camp, we do trade reviews 3 times a week, where we go every single trade that I do. So you know what I do? We whip out the P&L box. I say, okay, today I made this much money, or I lost this much money, and we go over every single trade. Found it, how I entered it, exited it, so on and so forth. Kind of focus down on what type of stocks are working. So today we're going to be covering some trade reviews of some stocks and setups that have been working very well for me. And then from there, we'll talk a little bit about current market conditions and how to trade them. And then we'll kind of take a glimpse into really how to take your trading to the next level. So we do these market recaps all the time for our students, and so this will be a good idea for you to kind of just see what some of our students go through. So if you don't know about me, I'm Kunal. I'm that handsome man that's got no hair. I have been trading professionally now. Session, like many of you guys, I've had jobs and shitty jobs and had working life. I run this business and I trade and I teach students all over the world. Insight into helping you guys get to the next level for a few different reasons. Number one, I've done this for a good chunk of my life, but half my trading career I've stumped. Like many of you guys probably, when you're taking time to do this, you realize it's a lot harder than you think. And obviously you don't have to probably go through that same process. You know, when I started trading coming into college, there were no blogs, webinars, full of websites out there. You know, you had to go on message boards and read books and do all the shittiest things you had to do to learn how to trade. I mean, it's books, but what can you do, right? So I've been doing this a long time, so I have a unique ability to come in and really give you the insight on works and what doesn't work in the markets. So let's get into it. You know, let's get into what's going on in the general market. Okay, so in today's market, there's big going on, stuff that's working. So what you'll see is TC2 platform that I use to look for stocks, to hunt for stocks, you know, to scan for them, build watch lists, and keep organized. So one of the things that you'll see in this particular type of market is it's been a runaway market. So since the Trumpster took over, right, you know, the market's just kind of epic run, okay? It's been huge, huge. So you've been coming in and you've been on this just endless trend. So this is the NASDAQ composite. So what you're seeing here is just a monster run in the NASDAQ composite. And this has been fueled by tech stocks, right? Tech stocks. And so one of the big themes that you're seeing in today's market is that tech stocks, right? Apple, Google, Netflix, all these bad boys. The Amazon, right? Each single one of these has been just busting out the highs consistently every single day. The book phase, right? Big, big moves in mega cap. Traditionally, when I started keeping here, we stayed away from stocks that had heavier float. So what float means is float's like the number of outstanding shares that are available to trade in the markets. And so heavier float stocks, typically they just don't move well. Hold on one second. Heavier stocks don't move very well. And so, you know, we've always stayed away from them. But this year, those large cap big tech stocks, they've been the ones that have actually been making the move. So you see stocks like NVIDIA, which is a heavier float stock. It's got 500 float. Now, all of a sudden, this is a type of stock that has $10 range intraday. So whether you're a swing trader or day trader, you know, you have some opportunities in the tech stocks. And then subset tech stocks, stocks that are growth stocks in the tech business that have just gone these epic runs. And so you see, like, this is stock that we trade almost every single day, Shop, right? So you can see this thing has really kind of tripled in the last couple months. AAL. And so these are the themes in this market. So this stock was at 20 bucks in January. And, you know, we've been trading this the last few days, and it's moving better now at 70 than it did even at 20s when we first started trading this. And so these are some of the themes that you have to be aware of. Right now, like I was saying, is that it's big cap and tech stocks that have all the momentum. So that's the theme side, right? So you have your AAYs, your Shop, book phase. See the massive trend, right? Your NVIDIA. So these are like your darlings that the money is piling into. So one of the things that you'll and see in stocks right now, even with the market, guys, the general market, if you take 99% of stocks, guys, right now, they are flat on the year. Believe it or not. If you Google it, research it, most stocks are actually flat on the year. But a handful of tech stocks are up so much that it's lifted up the indexes. So what you have to do is be positioned in the right sectors and the right stocks at all times. Because if you look at, say, the IWM, so the IWM is a general market indice. The IWM represents the average stocks. It's the Russell 2000. Small caps, mid caps, like your regular Joe Schmo companies, right? What you'll see here is when the Trumpster took over the world, right, you had this initial push, but then it hasn't done anything, right? So your general market is not broken out, right? Your S&P has broken out slightly, but it's also just been in a range this whole year. So even though we think that the market's really, really hot and really, really strong, since the beginning of the year, we haven't done anything. And in the regular market, right, it's been since December. So we think that the market's hot, but the average stock is actually not. The average stock is actually fairly weak. But people are piling into a handful of momentum names. And so those names become something that you have to be really, really cognizant of. I keep on my watch list all the time, and a few that we trade almost every single day. So Shop is one of these, AAO, then you have your Netflix, and then NVIDIA. Netflix, these are like your kind of Tesla. These are your big cap names. Now, I know for a lot of you guys, you don't like, most people don't like to trade larger names. Why? Because everybody wants to have, right, 5,000 of the dollar stock, and it explodes to 2. But what's happening right now is you have a handful of select biotech sectors, biotech stocks that just run up. The average small cap stock hasn't done anything this year. So the money's not there. Small cap stocks go through phases where they're really hot, then they're totally not. And the thing with small caps is it is such a hit or miss kind of thing. When I started Bulls on Wall Street 7 years ago, more than 7 years ago now, 8 years, whew, I had a full head of hair like Bradley Cooper when I started Bulls on Wall Street. And he used to do specifically just small caps. And what you would see is, you know, that market was hot at the time, so that's what we traded. But more often than not, you know, nowadays you kind of see these small cap stocks, and you know, they may jump up on some PR and then they just go through and they fade off. They fade off quite often, and you'll see that quite a bit with a lot of these little hot little PR stocks that come out. So, you know, for a long time, and in a lot of markets, a stock has a PR sub, right? So gap up means it has a PR, so it gaps up before the market even opens in price. And then they just explode. This would go to $7, $8, $9, $10, $15 in one day. But that's not the market right now. The small caps have been dead. And so when they gap up and then they just fade off the rest of the day, the money's just not in them. Right now, the money's going into more of the momentum tech names. And so we always have to hold multiple hats and be able to switch around when we see these things. So that's one thing. The second part, you know, not everybody likes to, you know, the long side. The second part is retail blow-ups. So if you're going to be a trader, right, understanding how to trade to the short side is probably more important than even understanding how to trade to the long side. There are stocks that are big turds all the time, and stocks drop a lot faster than they go up. A stock can take months to go up 20, 30%. It can drop like that in a day or two when the market turns or when it has bad earnings or whatever it might be. So right now you're seeing a decimation of the retail sector, right? So these are all retail stocks. So you're seeing like these big, big drops in retail stocks. So they're all in huge downtrends, by the way, right? Big, big downtrends, but you're seeing these big, big drops in these. So you have Macy's, Nordstrom's, right? So Nordstrom's at $50 a couple days ago. It had a day of bad news, and boom, you're at $40. Dick's, right? Sorry, just saying the name gets gets me to giggle. It's like when your best friend farts. You're like, that's so gross, but very funny. So Dick's, Dick's, same type of deal. See, this handful of days, $52 to $40. I'm going to go through how you get into these trades and stuff in a second. Right? So you got Dick's, you got Macy's, Foot Locker, right? Who doesn't like Kenny's? $80, $77, all the way down to $58. Okay. There are, I mean, you can look at Kohl's, any single one you could think of, they've all done it. Kohl's, JCPenney's, right? So the retail So retail sector has been decimated. Now, the beauty is that you do not have to hold through earnings. I'm going to give you a handful of setups to play when the retail sector blows up, where you can day trade them and then follow through later on. And that's going to be the beauty. We as traders, we're traders, right? We're not investors. I'm not Warren Buffett. That man's got great hair, by the way. And he can drink cherry Cokes, which I cannot. I pack on the pounds faster than you've ever seen, right? I save my calories for beer, not cherry Cokes. So we're not investors. Us holding through all of these earnings is not going to work. But we trade earnings every day. But what we do is we wait for the earnings, and then we wait for a handful of setups to come through intraday, and then we nail them. For those of you guys that are brand new, right, and you don't have a program like this, so if you can let me know who's brand new in this place, just type in brand new so I know kind of who to cater to a little bit. There are some charting programs. There's a free version of this. Ashish, my brother, where are you from? I love seeing Indian people. Our whole chat room is full of Indians and a lot of Patels. Patel. Good, 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 good. All right, so we've got Uganda. Man, Indian people love going to Africa. Good, 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 good. All right, so for those of you guys that are new and you don't understand really what's going on, two things, okay? I want you to do two things. Number one, if you're brand new, just go on the Bulls on Wall Street site and go in here into the contact form and fill it out and just write a message. I want your intro course. I want your intro course. That'll give you a course of like what all these moving averages are and all of this stuff. You know, most people buy it, you know, but whatever. I'll send it to you. All right. So I will get you an intro. That way, when you go home, it's like 6-7 hours. It's awesome. But I'll send that to you for free. But also for this, if you guys don't have a charting platform, I want you to open up your Internet Explorer. It doesn't work on Chrome. And the free version of that thing that I'm using, no, Michael, you don't. Go to freestockcharts.com and then hit this run free version. Click this bad boy. All right. Now, what you do, I'm going to have you I'm going to show you how to set this up so it looks similar to mine. So go here, and remember, this will be recorded, so don't worry about it, but create new layout. All right. You're going to have something that's like this. All right. So I want you all to look at the same. What ticker were we looking at? Well, let's just pick one. Let's pick Dick's because it's just fun to say. Oh, shit. That never gets old. To go to Dick's. So change symbol to. Now your stuff is going to look like this. I want you to click this thing here. And I want you to change this to daily. Okay? So I want this to show daily. Now, make this smaller. This, okay? Leave everything else the same. Now, I want you to do this add indicator. See this here where it says add indicator? I want you to type in moving. For those of you guys that have been with me for a bit, just bear with me so we get these new guys situated, especially my boy Ashish from Uganda. He could be my third cousin. Type in moving 3 times. Add history. Type it again. Boom. And then type it one more time. 4 times. All right. Now, as you got these 4 lines, do is just change, keep this blue. I want you to put in 9 here where it says 50 period and then add exponential. Change this average type to exponential. All right. Now I want to take this moving average, 20. Keep everything else the same and change this color to something sexy like yellow, right? Who doesn't like a nice yellow? All right, so you got 920. I want 50. So leave this as 50, but we got to change the color. Make it like a little. Boop. Hey, Kellen, I've noticed that free stock charts only really works on Internet Explorer. I don't know why. I have a Mac too. I use a MacBook, and free stock charts, I always use it on internet. Or you can use it on Safari, but you have to download the Lightroom plugin, or Light something. Silverlight. Damn, Ashish, man, you need people to know everything. Okay, so now we got this. Now I want you to add one more indicator. Stochastics. Add this here. Move this to the bottom. All right. Don't worry about all this stuff. Is when I send you the intro course, I'll kind of explain it, but for the purpose of, I don't want to get too off base here. Now let's go. Where were my slots? Hold on. Good. Good. So we've got our retail blow up. So now when I look at stuff, you can look at stuff the same way. Okay? Don't worry about it, Corey. Why you got to be such a... Just call me. I'll give it to you. Other things. Earnings plays have been hot. Okay? So you're seeing a lot of stocks run real hot off earnings. Right? So these gaps you see in stocks, these are called earnings gaps. So you're seeing big moves off earnings gaps. So like NVIDIA, right? AAY, these are earnings gappers, stocks that have exploded off earnings. So earnings goes both ways, to the upside and downside. But what I'm going to do is I'm going to teach you a few different plays to get into these on the day trade side. So for those of you guys, does anybody here raise your hand or whatever? Any of you guys use trading journals, trade journals, or anything like that to catalog your trades or catalog your thoughts? Do you use a diary? So I'm old school. I do written journals. Look at that beauty. I use this thing called Best Self Something Journal. It's pretty cool. Some of it's guided, but then I'm putting in like the stocks and stuff I am. So I've got journals for everything. So I have one journal for all my students. The students I talk to. Where's this thing? So I got for every single student. So like I have people like Isabel. I got like a dozen pages written on Isabel because I'm so fascinated by her. She's amazing. And we're good friends. And she's one of my mentoring students. So I've got a write-up on every single one of my students. What they eat. Do they date? Do they have sex? Do they trade well? What are their setups, their strengths, weaknesses, whatever. There's nothing about them that I don't know. Pretty cool, right? Thing for my stocks, right? So I write them down. Colors, like a little girl, like a little pretty princess. I got different colors so I can make little doodles and work on the best stuff. But one of the things I do that I want to share with you, and this will help you with these themes, is I use Evernote. Does anybody ever use Evernote for anything? So what I'll do is, hold on here. There. So in Evernote, what I'll do every single day is I will catalog my best play and the chart.
$2,000 does cost money, yes, but it's amazing. It's the only paid tool that I need to trade. And I think it's like 40 bucks a month. It's the only paid tool I need to trade. So in talking about trades and what goes on, one of the most important parts of trading is to catalog your best trades. Your best trades, right? Catalog them every single day. And so what you'll see, I'm going to walk you through how I do mine, okay? And then we'll kind of talk about these patterns a little bit. So what I'll do every day, I post a picture of my P&L. So this is my stock box, right? And so this was yesterday. So this is my stock box. So these are all the different stocks I traded, right? Kind of an off day. I had one awesome trade and then a bunch of junk, which is, that can be the normal, okay? So what you want to do in this, so I put a picture of my best trade. Why do I do this? Does anybody know why you would do just your best trade beyond your regular journal? In trading, it is very, very important to catalog your strengths. To catalog your strengths. In trading, you only have to be good at one or two things to actually be able to make money. If you are the master of one thing, you are way more than a trade. Say you trade some Bitcoin, some options. You trade this pattern, you go long, you go short, you're bisexual, trisexual trader. You go all over the place. You're swinging every way you can. And you're good at all of them, even above average. You will lose money. Shit you not. You will lose money. In trading, it is the best to be a master at something, to know completely, in pure detail, every single angle that can happen with that type of stock, and to be able to go and hit it every day. And then as you get better, you can add to your repertoire. Like I'm the master trader of 18 setups, but that took a handful of years to get to. So right now, I want you to do your best setups. Why? Because in trading, does anybody ever, like you see stocks and you just want to jump into all of them? Anybody ever do that? I used to do that. I am a stock jumper. I see one thing, my buddy talks about something, I go on the Twitter, whatever you call it, and somebody's talking about something, I'd be like, oh my God, this guy's got 60,000 followers. Like, jump into this, right? Of course, he's probably had this, friggin' 20% before I ever did. But right, you just want to jump into everything. You want to take every single trade. You see something, it goes up. What's your natural reaction? I want to get into it. We just think if it goes up, it's got to be great, right? Everything. But that doesn't work, okay? I want you to catalog your best trades. Why? If you can understand what you're good at, if you can understand where you have an edge, where you make money on something every single day, rather than this journal of your junk, if you are cataloging what you're best at, you will inherently put in your mind, because this is something you make the most money at. I made $1,500 on this, $1,200 on this, $500 on this. Guess what? You find that you make money on these things. So now when you see these things, guess what's going to happen? You are going to play those things. It's pretty cool, right? So I take a snapshot of my P&L. So I see what the best trade was, $1,500 AOI. Put a chart, all my different entries. Then I ask myself a handful of questions. What is my setup, right? Because I'm trying to catalog my setups. And then I tag them on Evernote, right? So I add tags so I can go through. I got thousands of these trades. Number two, what are my market conditions? Number three, did I gotcha. Did I hold on to my winners? Did I get in as big as possible? Does anybody ever notice that trades, you end up with all these shares, but then you're like, the one you won on, you had like 200 shares. You're like, yeah, I got a little baby shares, right? You get your little baby shares on your winner, and then you're like all in on this monster loser. That's a reverse that, right? My thinking always when stock is working in me is, can I get in as big as possible? How big can I take this? As big as possible. There is no limit, because in the stocks that are working for us, more and more and more and more, because that is working itself for me. Did I break any trading rules? Right? That's always, you want to kind of keep catalog, did I break any trading rules? And the reason for this is, you'll find over time that there's a handful of things that you break all the time. And you need to know that. Why? If you do your review for the course of, say, a week, and on number 5, you break the same rule 3 times. Guess what? That weekend, you've got some deep thinking to do. Why am I doing that? And then what you need to do is just put in a quick plan or procedure in place to prevent that. And it can be anything. Look, sometimes we get so, think of it, like we always think everything is psychology. Right now is like the age of the metrosexual, right? Where everybody's emasculated and we think psychology has to do with everything. And so, we're always trying to get inside our own brains. Well, you know what? Sometimes we just do what we do. But what we need to always think about and have an awareness of is, how can I fix it, right? Let's be fixers. And so when you have something you're breaking, come up with something to fix it. So like I have a student of mine, I won't name names because he's in here, but awesome guy. He makes money 4 out of 5 days a week. But every one day he goes rogue. Meaning rogue is that he just takes, he has a loss on his one trades, and then it spirals downhill. One loss begets another, and it begets, and he ends up losing basically as much as he made in the 4 days. And they're through all these bullshit trades, like, just random trades because he's just reaching. Okay. So, we sat there thinking, like, why do I do this? And I'm like, well, he's like, why do I do this? Like, how can I fix this? And I'm like, well, I'm not a psychologist. Who cares? This is what we have to do. Right. And because we could dig into, he's 50 years old. I mean, I don't know what happened to his childhood and what makes him overtrade like that. Right. Nobody does. And it doesn't even matter. We just need to fix. Right. And so rather than sit there and think about it, I said, well, this is what we need to do. I want you to show your wife, because I know her, she's a real ball breaker in a good way. I want you to show your wife your P&L every single day. Because I know, because I've talked to her on the phone, he's one, in my mentoring group. I talked to her on the phone. She supports him totally. Awesome lady. But she is not going to tolerate losses in infinite, right? Especially when she knows he wins. He wins 4 out of 5 days a week, right? He's just one day he falls apart. So I want you to show your wife your P&L every day. Because when he wins, guess what he's going to get? A little high five, maybe a little hug and tug, who knows, right? He's going to get gifts. Just and a good woman. But that day, and he can lose, right? But if she sees, because I have her stand in class. I go, why don't you come to class so you see a little bit of what we do? So she knows we should take 3 or 4 trades probably every day. If she sees a day he takes 20 trades as an epic loss, what's going to happen to him? Oh, he's busted, right? He's not going to do it. He's not going to do it, right? And so just something like that can kind of curb it. The accountability, somebody look after you. For some people, it's just trading buddies. In our mentorship group, like sometimes I'll see some of the people pair up. Hey, Simon. Oh, hey, Henrik. Like, oh, let's work together and share trades, right? Just like having that kind of buddy bond sometimes can help too. But those are the things that can really do it. Always think about solutions. Remember, people are not broken, right? I mean, you're living your life. You exercise, you eat well, treat your kids right. You're probably a pretty damn disciplined person. So guess what? If you're disciplined in that stuff, you can 100% be disciplined in your trading. So let's talk about this. So this AAY this is a bread and butter setup, right? So This is I'm always looking for these patterns, right? So this is a bread and butter tech momentum stock, right? Big trend, okay? So it had its earnings this day, right here, and it's just went on a rampage ever since. Now it's taken 5 to 7 days here to consolidate. So what pattern is that? Does anybody know? That's a flag pattern. So anytime you see a stock that has a big thrust, $10, $15, 10, 15%, whatever, and it goes for 3 to 10 days, and it builds a range. When it builds that range, when that range breaks, guess what will happen? You get your next leg up. No, not short. Jesus. Long. When it breaks, you I think it's kind of funny though. You want to be long in this thing, right? And so as a day trader, what do we do? So as a swing trader, that's somebody that holds multiple days, right? It's just you're using these daily charts that your stop under the 9 EMA and you're letting it go. So like once this range, right, you're going to buy this thing, put your stop under your nearest support. You just use your 9 EMA. And right, and now you're playing the next leg to this. Now, if you're an intraday trader, okay, and guys, the reason flags and things like that work is that consolidations and bases, that sideways motion after momentum ebbs, those are the things that give power to stocks. Stocks derive power from consolidation, from bases. It's momentum. It begets momentum. So when you have the sideways for a period of time, what allows it to do is it rests. It's like a human being sprint, right? If you can rest for just time, what allows it to do? You recharge your batteries, you're ready to go again. And the stock is the same way. If you can rest for a little bit of time, it allows fresh in. It allows the stock to rest and now next move. So what we want to see now is if you're a swing trader, that's your move, right? As a day trader, right, when I see this stock gap, see how it gap from about 64 to 66? Perfect. The gap out of the flag is a sign of strength. Now what I want to be doing is using my intraday tactics and techniques to nail this thing for entries. So guess what? This stock gaps up. I don't want to chase any gap. Guys, let me tell you a lesson that will stay with you for the rest of your life. Anytime you buy or short on that first candle, it's a crapshoot. It may work one time, but you will get burned so many times. My biggest losses in my career have been when I jump into something the first candle. When you're in the first candle, you have not allowed yourself to. As traders, we're in the business of playing what? Patterns and setups. Well, there's nothing that you can do the first pattern because it hasn't availed itself to you. It hasn't shown you what it's going to do, but more importantly, how you can manage your risk and build an inflection. So I leave it alone. I want it to set up, meaning I want it to form about $68. Then spends the next 3 candles. It drops about $2 to that 9 EMA. I like that. So when a stock gaps up and pulls back to the 9 EMA the first time, I'm using 5-minute charts. Pulls back to the 9 EMA that first time and it holds, that can be a potential buy point for me. It's called a quick buy. So I'm buying in here and setting my stop under. Okay? So, I'm in 66, mid 66s, give or take a few pennies, right? So now, guess what? Stock pops up to 67.50. I'm up $1 on it. I sell a partial. Why? Well, my risk was like 30, 40 cents, and I'm up $1. So I always sell off a couple. So I'm in 400 shares. I sell off 200, whatever. I book a couple $100 profit. Remember, we're in the game of just booking profits. Now the stock comes back to the 9 EMA. So I add some back. And then you can start to see what's starting to build. See this? Like it's starting to build a flag pattern. See the sideways consolidation? So you got this trend line coming here. And then you got a trend line coming here. So now you built yourself a flag. So as it breaks here, I double up my position. I double up. Even though I was selling here the first time, it doesn't matter. I was just taking some profits. Now I formed a completely new pattern. So I'm doubling up. As traders, we want to try to get in as big as possible in stocks that are working for us. So I double up, right? So now I go from 400 to 800 shares, all right? Now that's at 67.20. The old high is 68.10. So I got about $1 room. So I sell off half into resistance, okay? That's the norm. Because, you know, it could fade here because it's only the second test of that resistance. Okay. Now the stock is cruising all the way to 69. Good. Now I'm just scaling out 100 at a time. Guys, if you're day trading, it is very important to be on a per share broker. A per share broker. Okay. So that you can scale in and scale out. If you're paying $5, $10 per trade, your commissions will kill you, okay? For me, I pay 2,100 shares I trade. So and there's no, and that's it. So if I buy 50, it's 13 cents, 100, 27 cents, whatever, 200, so on and so forth. So I can sell out 100, 100, 100, 100. I sell out all the way up in here because look, it's getting a little long and short in the wiener. So I'm scaling all this way. Remember, we're in from the 66s, right? 69, that's a good run. Now, stock starts to come back here, and what are we building here? Guess what? Draw a trend line right here. Let me get my drawing tool here. I need a cooler color than that. Let's see here. Doop. So I buy right here. My stop goes under this last low. 27 cents for 100 shares. So now the stock comes up to this old high of day. See that? That's a wrong color too. Purple. So I want to sell some off into this old high. So I sell some off into here. Remember, it doesn't look like much, but this is almost 70 bucks. And I'm 68.80. Remember, we're dipping and ripping. I'm still holding some from the beginning. So I sell off into this resistance, right? So now the stock pulls back, comes up, pulls back. And so what are we doing here? What's building here? Does anybody know? This is a flat top breakout, right? So see this? Like you're testing and testing and testing and testing and testing, right? You're coiling up like a mother. And then you got, right, your moving average is coiling up. So as I add back, now I only sold half here, so I'm adding back the half I sold. So stock pops up a little bit and then it comes back down below the breakout spot, but it hasn't broken support yet. This is very important when you're trading. Just because the stock goes down 10, 20 cents does not mean that it's a sell. Stocks are not linear where you just draw a line and it goes over it and you make $1 million. It is not linear like that, right? If it was, everybody in the world would be a good trader. So the stock pops up and guess what? It just wasn't ready yet. Comes back down a little bit, a few pennies. And then it starts to go and really up, right? It starts to speed up, speed up, speed up. So now as this thing's speeding up, I'm just selling off, right? Literally basically 100 shares at a time till I get there. All right. And then later on, guess what? The stock, so I keep a half a position still. And then later on, it flags again. So I buy for this flag and it doesn't work. The flag breaks, so I sell off for 77 cents. You know, I sell at 77. So overall, damn trade. I've been holding it since the beginning. I never had to have too many shares. You know, I was basically in 600 shares. 500 shares, 400 shares, 200 shares. I was dipping and ripping the whole time. But it's 1,500. And at one point, I was up 2,200 on it. But this last one, I took a loss on. Whatever. So that's a good setup, right? That's my best setup. So did I hold the questions? Did I hold on my winners? Yes. I added every single pattern I could. As a trader, I measure myself, how I measure when I grade their trades. Did they get chunks? Chunks. You see, hear that term in football, right? Chunk plays. Did I get 20 yards, right? Or did I dink and dunk my way? In trading, there is no dinking and dunking. Okay, so the commissions will kill you, and you open yourself up for the big loss. There's no dinking and dunking. You gotta take chunks. So I always ask myself, did I take at least $1 on a trade today, if not more? $1, right? Because that tells me I'm holding for the real move. I'm trading real patterns versus just scalp, 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 scalp. I know 3 scalpers in the world that are any good, that, you know, nickel and dime their way for 10 cents here and there and make money. Because the commissions will kill you. And you always, when the stock reverses, it's not like you're going to get out for that small of a loss. Your loss is always going to be bigger than your gains. So did I hold on to my winners? Yes. Did I get in as big as possible? Yes. Did I break any of my trading rules? I broke one rule. I added a full position the last flag, which is not really that strong of a pattern, right? These were like longer patterns, and at the open, you get shorter patterns. This is not, for end of day, that was not a good pattern to go full size. I could have added 200, 300 shares here, according to my rules, but I added more. I took it up all the way. I was going for the home run, which is actually, you know, I'm accustomed to do that. I believe in going for it. I believe in going for it. Like, I believe that as traders, we have the responsibility to put on risk when we see it. We won't always be managing risk, but when we see the opportunity, we have to be. And what better way to put on risk than a stock that's proving itself to you? See what I mean? It's proving itself to you. So it's not something you're taking a guess on. It's proving itself to you. And so I have the responsibility to keep putting on the risk. Right? So overall, that was pretty good. So let's talk about today. Right? Same type of deal. See? Scratch trade, scratch trade, scratch trade. Jump. 200 bucks, 100 bucks, just a bunch of jump. 1,800 bucks. I was up 2,500 point. Same type of deal. So this is a stock that's another earnings play. Okay? So, you know, we've been talking about. So this stock had earnings today. If we look, so in the morning, I look at my TC2000. We're looking for earnings. So you can see here in the morning. So Momo, ADR rising 2% pre-bill is Q1 result, top street mark. Sees Q2 revenues above consensus. So they're probably pretty good earnings. But it only gapped up 2%. Okay? And one of the ways I scan for gappers, I use Trade Ideas. So in the morning, I use a program called Trade Ideas, and it'll show me all the stocks that are moving pre-market. So like you'll see all these stocks pre-market. You'll see all these stocks moving around pre-market. So you'll know which ones had earnings, because the only stocks that move pre-market are the ones that really have earnings or news. So I'll be running my Trade Ideas. And so I come up with my TC1000. I see this. Now, my first clue to Momo is that it only rise 2%. Stocks that have big earnings gap up large. Stocks that have big earnings, they gap up like men of honor, right? Look at these things. OLED, friggin' 90 bucks, gapped up to 105. Have good earnings, they gap up strong. They're not going to gap up 2%. 2% ain't shit. Momo moves 5-6% every day anyways. So 2% isn't anything. So I already know off the bat that this thing is probably donezo. 2%? That's all. I mean, it moved 8% the news. So 2% is a sucker's gap. The second thing is, anytime I look at a stock that has earnings, I always look at the past history. So what were the last times it had earnings? What did it do? So in November, no, Brian, I'm just teasing. I mean, I'm talking in generalities. So November, this is where the research comes in. November, the stock gapped up on earnings too. And had the same pattern. See? Exact same pattern. See how the pattern was really, really strong? Just like it is now. Same. And it gapped up to all-time highs. And then the rug got pulled. And it tanked that day down to 21 from 28.50. Big drop, right? So I already had it in the back of my head. I looked at it. We traded it this day the same way. I've seen it actually in the past again on this. So I had a feeling already to be aware of this. Okay? So today, when I see it, you can see this thing gapped up and it's green. And it went, right? So it went green to red. So once the stock is green in the day, it goes red, it's already done. You have to short that thing because all those people that thought they were up on the day, that this thing was good, now they're all underwater. So it goes red on the day, and then you tank all the way down to 39 bucks. So, you know, for me, as this thing gapped up and it broke under the first candle, right? I teach both day trading and swing trading. Right now, this is a particular day trade. So now, as this thing is coming up, what happens? Well, wait till I see how it opens. The last time it had that, Brian, it did pop the next day. As this thing started to consolidate, I added more shares. Remember, as traders, guess what's going to happen? If a stock starts to consolidate and shows us what we need to, we want to be adding shares. So I'm short here. I'm covering all the way down into here. So I'm short 600 shares. I'm cover. And then as this thing goes sideways, I'm adding more shares. So I actually add, let's see. So I short 42.60, 43.60, cover down to 42.60. Then I add 42.60's 800 shares. Then I add a whole nother tier to get full boat, which is 1,000. And then I cover 600, 41.90, 41.70. I re-short. So I'm taking this thing all the way down. So I short here, and it's cover. I always scale out. And you can hold the whole time. That's not my particular cup of tea. My weakness as a trader has always been focus. I know everything there is to know about trading in terms of my style. And I'm always getting better. I lack focus. So I have a chat room, right? So like, I'm in the chat room all day, and dude, our chat room is fun. So I'm always goofing around with the guys. But I have a business to run. I've got a whole host of mentoring students. So like, we use this program called Slack for my mentoring students, where I'm chatting with them, all day. These are my guys. So like, this is one of my students, Henrik. He sends me every single trade that he takes in the morning, and he sends me every single one. He posts charts of them. So I'm multitasking a lot. So he's sending me out. Everybody's sending me their trades and all this fun stuff. So I'm multitasking a little bit. I've got a chat room to run, and I get the mentoring students. I got a business to run. My mom's always calling me. I lack a little bit of focus, and I've always been, since I've been a kid, a little bit ADD, like you can probably tell just from the way I talk, right? I'm just a little bit all over the place. So I've always lacked a little bit of focus. So I've never been able to like hold the whole time, because guess what? Against you, and then I'm like, oh fuck, it went against me, right? And then I end up taking some epic loss. And so I gotta always scale out. It keeps me in the game. As an Indian person, when you take profit, when an Indian person takes profit, he feels a sigh of relief. We're cheap. When we don't take profit, we're always stressed out. Indian people are the worst, man. They're the cheapest people. They give bad tips. They'll nickel and dime their own cousins for money. I'm not like that. I've learned not to be like that because my mom is a good woman. But Indian people are cheap, man. Some of my Indian friends, man, and when I was a kid, they'd be hitting me. We'd be going somewhere like to play laser tag or something, and they'd be like, "Hey, man, you got like $5 for gas?" I'm like, "Bobby, man, we're cousins." Hey, you got that $5 for gas? My dad, when I was a kid, we'd be at Taco Bell, and he'd be like, Taco Bell. So my dad's a vegetarian, my mom's vegetarian. He'd be taking all this Taco Bell sauce home. Only the hot, though. Not the medium, not the milds, and not the extra hot. He just liked the one in the orange packet. He'd have like 70 of them, and he'd keep them in his glove compartment. So anytime you open your glove compartment, like if you wanted sunglasses or something, all this Taco Bell. I'm like, damn. He's like, dude, the bacteria in my office stinks. He's like, I got to take a Taco Bell hot sauce to make it tasty. I'm like, oh, my God. So we'd be at Taco Bell, he'd be getting these bean burritos, and he'd be and make the bean burrito like you've never seen. These are like 69-cent burritos. Hey, buddy, come on. You got to put a little bit more beans in that. I'm not asking for much. I'm not asking for the beef. I'm not asking for no chicken. I'm not even asking for a little bit of rice. I just need a bean burrito that's full. The beans are the cheapest thing you got. I know what a beans cost. I buy a can of bean all the time. And I know that a can of bean is like 10, 15 cents for you guys. Put in those Taco Bells is not even a beans. I know it's not a beans. You know it's not a beans. It's not a beans. And so, hey, let's make these bean burritos a little bit juicy. Okay? Okay. And then, so then, he's cheap. So, sorry for the tangent, but so now you know why I got to take profit. So I short here, I cover. Then as it's going here, and it flags, right? So we're in the business of flag patterns, right? So John, if this thing doesn't work within the second, I pretty much get out. I don't give it any room. My timing is almost always perfect. I never give anything more. If I'm on, there's no give back. As this thing flags, I short again. So see what I'm doing here is I'm adding to my position. I'm adding risk. I'm not covering all my shares. I'm still keeping some of my original shares. I'm covering some to pay myself, but I'm getting bigger and bigger and bigger for the real move. So now it's just ching, 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 ching. Starts the flag, ching, 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 ching. This thing gets down to 39. So this is where I made my mistake, though. So this is your 5-minute chart. Once it got to 39, it hit support on its day. I still left 500 shares here at 39 that I didn't cover. I ended up covering like 100 down at 39. See that? 100 at 39, 100 at 40.40. Oh, I'm fucking a greedy bastard. I'll tell you what. Even though I just gave you this huge speech of Indians need to take profits, Indians are also greedy. They're cheap, but then the other times they're really greedy. And that's what happened to me. I didn't take all my profits, enough of the profits. I left half my position. And I've had a huge gain of $2,700 on this thing. And by the way, these are 5-minute candles right here. 5, 10, 15, 20, 25 minutes, right? $2,700. That's good cash. And I got a little bit greedy. And so it started to bounce. So these are just the 1-minute time frame and the 5-minute. It started to bounce. So then it started to bounce all the way back to the 9 EMA here. And I added some at the 9 EMA, which is totally fine. You want to add there. That's at $41. Comes all the way down to sub 40. So I'm up at, I got 1,000 shares at this point. I've reloaded, including the 500 from down here, right? 500 I made $1. So I got a good rip on again. Didn't cover any. And then this is where I broke my rule. So then it started to bounce. And once it broke over this 9 EMA, I knew that probably was going to reverse. And I got stubborn because I was up so much money. And so covering this thing at like 41, a little bit under $41. I let this thing all the way up. I ended up covering at $42. Such shame. I have shame even looking at it. So I gave back more than $1,000. Fuck. All right. That's bad. So even on a good trade, no trader is perfect, right? We all break rules. We all break rules sometimes. We just don't want to break them all the time. So, you know, I ended up having to cover up here, and then it rolled over later, blah, 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 blah. So did I get it as big as possible? Yes. Did I break any trading rules? You know, yes. I let my auto shares turn into a huge loss. Game turned into a loss. That's a breaking of the rules. But this is a very, very important thing to do, right? This is a very, very important thing to do. I want you guys to be documenting the trades you do every day. And the reason this is going to do this is you're going to start to develop what your best trades are, right? You're going to start to develop what your best trades are. Look what you'll notice with my trades, that every day, right, I have one that really kicks ass, right? Yeah, I have one that really kicks ass, and then the rest of them sometimes are just junk. I mean, there's not that much going on some days, but the rest of them are junk. But the key is if you have every day there's opportunity. If you can elongate a gain on one stock, it covers up a lot of mistakes. But as a day trader, you do it green every day because we're taking opportunities all the time, different ones, 6, 7 trades, right? And win every single day if you see it. And some days I lose, right? You know, on the 17th, lost $1,000 bucks. So, you know, I had all these green days, but then on the 17th, lost $1,000 bucks, right? Some days that'll happen. Some days I make 94 bucks. Now this day too, I was up 2,500 bucks and I broke a lot of rules back. Kind of weird, right? But you know, most days I'm a trader. I'm not one of them epic traders that makes $50,000 a day. I trade for a living, right? So that means when I see money, I want to take it. What? I got fucking bills to pay, right? You know, you take your money as you get them. I try to finish green every single day. I would rather make $1,000 bucks a day than make $7,000 a week and have 2 days where I'm red and I'm all up over the place. You know, I like consistency in preparation, consistency in results, and that's going to be good. So these are some ways to kind of play some of the earnings. So let's talk about these retail blow-ups. So I had some good trades. I do a very, very specific setup on these retail blow-ups, okay, that are my bread and butter, okay? So when I see these retail blow-ups, so let's talk about, we'll go through every single one of these, all right? So JWN. Oh, damn. Hold on. So I save snapshots of, I mean, I have thousands of, I snapshot probably in the tens of thousands of trades. Every single thing I do. And even trades that I don't take, but I like, I snapshot them. So let's talk about this. Okay, so I use trade ideas to search for gappers, right? So I'm searching for gappers during the day. Where the fuck did it go? Hold on here. Hold on for 1 second. All right. No, not that one. Hold on. There we go. Now, for those of you guys that don't have trade ideas, say you want to search for pre-market movers or gappers. You can use the stockmarketwatch.com. I got 4 monitors here. And look, I travel most of the year. I'm all over the world. You know, in the last year, I've been Hawaii, spent a month in Hawaii, Bali, Costa Rica. I mean, everywhere. So when I'm traveling, I use my iPad as my second monitor, and I got a MacBook and just a regular Asus computer for like $500 or whatever. Nothing too fancy. So I hit pre-market here. So in pre-market, if you hit the pre-market tab, you will start to see all of these gappers. See that shit? See all these gappers? These are stocks that are moving pre-market. And look at the hot movers of today. Right? These were some of them that people were trading in our chat room and stuff. So you can use this, it's free. So once you see a stock that has a gap like this, right? So it has a gap on the back, okay? So you've got a gap down. Now, once you get the gap down on your 5-minute chart, you know, there's a trade that we do called the opening range at the breakout. That might be a little bit too advanced for some of you guys because it's really fast. It's about getting 2-3 in within a few seconds using 1-minute charts. But that's that might be a little bit too next level, but I'll show you how to do it anyways. It's super. It's very fast. That's why I try not to go into a random webinar. But you get the gap down. An opening range breakdown requires 3 sideways candles. How many? Minimum 3. If you short the first candle, you will lose, and you will lose bad. You short the second candle, you will lose bad. The third candle, you have the third candle form, you have just enough base, and you've let your moving averages catch up like your VWAP to manage your risk. So once you get a 3 candle sideways movement, you can take the trade under the base. So as the thing breaks 43, I short 500 shares, give or take, 400, 500 shares, right? Stop above these candles right here. Now, it's supposed to be a quick trade. If you take a 3-minute pattern, how long should you hold that? Does anybody know? Imagine, this is where people screw up. There's 3 different times of the trading day. All the whole times are different. At the open, which is your first hour, those are quick trades because they're the first hour. Your middle of the day is retracement time, so those are longer trades. And then your end of day, you know, you get your fades or your pops. So that's a different type of trade. At the open, because you have short patterns, you have short hold times. Remember this, write it down. The longer your pattern is, the longer your hold time will be, okay? The longer your pattern is, so whether you're looking at a daily chart or an intraday chart, it'll be a little bit different, okay? So a 3-minute pattern, you're probably going to hold this thing for 3 to 10 minutes. So short 500 shares, boop, get down to 42.50 on the same candle. So this is like within 30 seconds, right? Made 50 cents, take off a portion of the position. You go sideways, boop, get down to 41.30s, right? And it's just cover, cover, cover. And then it sits around sideways. It looks like it's going to keep going, and it starts to reverse. So you get up, right? So you got this nice quick trade, couple in 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute, 7 minute, 8 minute, 9 minute, 10. 10 minutes, $2. That's what they're supposed to do. Now, this is the thing. For some of you guys that have smaller accounts, right? Many of you guys, we all have to start somewhere. Most of my traders in my mentorship group or my boot camps have $2,000 accounts, $5,000 accounts. So they're probably going to not trade 500 shares, but 100 shares. But this is the thing, guys. Remember this. Say you have 100 shares. That's going to cost you $4,000, right? You cover for $2. How much money did you make? It doesn't seem like much, but it's $200. Do that every day. Guess what happens? At the end of the week, your $2,000 account becomes $3,000. I mean, it's not as linear, as easy as that, right? Because there's always ups and downs. But what I'm showing you is that small gains, $200 here, $300 here, $400 here, they add up. And the purpose in the beginning, if you have a smaller account, is to build your account. right? Because obviously you can take more shares, more risk when you have $50,000 versus $2,000. Everybody wants, you know, so you $100, $300, and you build up your account. We all had to do it. There's no shortcut around it. The right way, though, by taking clean stocks that have lots of volume and no gambles, and you can take 200, 300 here and build it up, right? So that's your opening range breakout. Now, the thing that's been really working well on the retail stocks is the VWAP fizzle. So what will happen is, this is your 5-minute chart here. So I look at the 1 minute for the first 10 minutes, and then I move to the 5 minutes, the rest of the day. Once a stock really extended to the downside, it'll squeeze, you know, because it's down 10%, 15%. It's going to pop a little bit and have just a little bit of a pop. And that's totally okay. All stocks do it. You know, every example I show you, they'll do it. But what you want to be doing on this is you just wait. So as the stock will pop, you let it pop. You want to let it pop and do whatever it's going to do. You don't know where it's going to stop. But what will happen is, as it pops, at some point, it'll break back under the VWAP. The VWAP is my favorite indicator. It means volume weighted average price. It basically, in layman's terms, is the average price of the users, of the traders that are in this, okay? So as it breaks back under the VWAP, what that tells you is that's the average price of everybody. So once it breaks back under, it tells you everybody's back underwater. A stock is bearish when it's under the VWAP, and all the subsequent pop. You want to be shorting this once it comes back under the VWAP, and then there's a good shot that this thing can fade off literally the rest of the day. You take a position, give it a little bit of room. I like to give 20, 30 cents above the VWAP, you know, that count for. And then it's just a matter of, once you get towards the low of day, you always want to cover some. And then every single bear flag or pattern you see, you can keep taking them and adding risk, right? A stock may move $2 during the day. But if you are trading around your position, you can turn that $2 into $4, $5, whatever it might be. I'm just talking shit, but right? You can elongate the overall move by, as it spikes and doing what it's going to do, you keep adding to the risk. You keep pushing the play when you see the opportunity. Push it in. Man, that sounded dirty. Just add more shares. Rob Byer, you better not be leaving, brother. We don't play that game. Foot Locker, right? Foot Locker. So this is the same damn thing. Let me show you. So I did the exact same 2 setups on these. So Foot Locker is $77. Fuck yeah, it's awesome, Jeremy. So $77. You get this big gap on earnings. You find this right on this stockmarketwatch.com. Right? And guys, I'll answer everybody's questions at the end and stuff. You find it right on the top losing stocks. You get this big gap, okay? So now what's going to happen is I do the same setup every time. Check this out. How hot is this? Tell me you guys can't do this. You can do this. As long as you have the rules in place, you know the pattern, and you don't act like a schmo. The gap down. It's a 1 minute chart. We need 3. How many candles do we need sideways? 3 candles, right? 1, 2, 3. Damn line. Not too bad. Good. Corey, no, I'm not in paper trade world. That TC2000 has a simulator. Mine are real time. I'm in the platinum version. I don't use the simulator. I'm just using them for the charting. Yeah, they're in real time. dozens of shit. I have, you have streaming. I have streaming scans going. The Full Locker, 1, 2, 3. Short. So what do you got? What price is this here? About 60. 60. I don't even go too many shares. 400 shares, guys. 400 shares. Right? Stop just goes above this candle right here. I'm risking about 40 cents. Now look at this. Spike. And you don't know how deep the spike is going to go, guys. You don't know. That's why I scale out. Because you don't know. I get one swoosh, I take off half. I get another swoosh, I take off some. I get another swoosh. I keep on taking them off because guess what? You don't know. At some point, they can start reversing, whatever. The open is wild. It's the wild, wild west. So I want to keep taking these off because they can come back, right? And they do. So now the profits drop $2 at the open. Cool. So what do you want to do? So remember what we just talked about. Once the opening range breakdown is done, what do we do, guys? We let it squeeze, right? Let it pop. And then what are we looking for, guys? What are we looking for? There we go. We're looking for this thing starts to pop. It pops up above the VWAP, right? And it's hanging out. Now look, this is where things get a little tricky. See, it broke under the VWAP right here. I was in this thing. And then it just popped right back above, right? But my stop loss goes here, right above the last base. So it's not a big deal, Pops up, pops 20 cents, whatever, right? It just runs right into the resistance. Most of the time they're linear, but in trading, nothing is ever red light, green light, buy, red light, sell. Sometimes we get a little shakeout, but that's okay. If you're not stopped out, you're not stopped out. The worst thing you can do is move your stop. Anytime you start moving your stop around, you're going to get over trading. So stock pops up, and then it comes back down. See this? It breaks back under the VWAP, and now it's really just hanging out under there, right? See it? It's hanging out under. So once it's hanging out under there, I'm adding more shares. I'm trying to get in as big as possible. So you'll see this in, I think, what day did we trade this? Right? FL. Yeah. Trying to get in, adding here, I added here, I added here, and I added here. I'm trying to get it as big as possible. Right? So at this point when I'm here, I'm in 700 shares. So now we're coming down. Pop down. Coming down. Kristen, did you eat?
No.
Maybe we'll go out once I'm done. Little date night?
Yeah.
Hey, no hanky-panky. I'm not married. I'm saving myself.
Yeah, you are.
So coming down, right? Coming down. Look, this thing is just cruising down. As long as it's holding trend, I'm not getting out of this thing. So I hold this thing literally to the close, and guess what? I'll scale it out some along the way, but the fizzle is in place. Hot damn. Can you guys do that? I mean, it shouldn't be too overly complicated. Hell yeah, you can. Heck yeah, you can. That's my peoples right there. Let's talk about dicks. Sorry, man. I don't know what's wrong with me. Let's talk about dicks. Check this out. So this stock gaps down. It never gives us the ORB. It never showed the 3 sideways. Couldn't take it at the open. That's okay. It started to squeeze right away. See, that's it pops up. runs it as 9 EMA. Now it starts to come down. The best fizzles are going to happen when your 9 EMA is coming down on top of the VWAP. Dude, it squeezes it down, right? It gives the stock nowhere to move because it's coming down on the VWAP and your stock is in between. It's in between the VWAP and the 9 EMA, right? It's a sandwich. It's the penis in between it, right? It's right in the middle. And so when it's got nowhere to go, where can it go but down? And the second part is it helps you manage your risk, right? Because you know where to put your stop loss. So as this thing breaks under the VWAP and you got your 9 EMA right there, you can manage your stop loss. You can go in pretty big. So boom, take this thing, set your stop, let her rock. Mr. Joe, we use some different setups, but it's similar setups on the long side. But thing is with stocks is when stocks drop, they just bleed out. They don't really do that on the long side. It's something about the rush out the door that just gets people to sell everything. Short, set your stop, and then look, you're just cruising down. Cover some along the way, guys. Don't be greedy bastards. And then you want to be adding as you see setups. You get this kind of bear flag, add some, right? And then you get a bear flag again, add some, and you keep going. Well, these are earnings plays. So whether the market's up or down, they're going to work. Like, for example, today, I had all these stocks on my gap list. So in the morning, I search for gappers, and I put them on a list, okay? All the stocks that are down. Look at that opening range breakout. Hot damn. Imagine taking 100 shares. Listen. That's called an account doubler when you catch one of them. So this is like AZL. Now this is $600. So a lot of people are going to play it, but this stock gap down on earnings, right? It's on your boom, 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 stock market watch. So look, all day just hanging out, right? You spike above the VWAP and then you break back under, right? So you're always waiting for that spike above the VWAP and then the break back under to fizzle. And once you start to fizzle, now it's pop down. And then look, once you're under the VWAP, a stock, when it's late in the day, and a stock is under its VWAP, it is guilty till proven innocent. You short with impunity. I almost pulled the trigger on this right here, but even 100 shares would have cost me 60 G's, and I was in all these other damn stocks. I should have just taken it because guess what? 100 shares, even if it costs you 60 G's, that's 2K right here. See that, Mr. Ashworth? This is the stuff that we got to get you in because you're going to be able to, it's less stress. See, your risk would have been, you short here, your risk would have been to 9. We're talking about a buck risk, right? But buying power, but who cares? Even if you do 200 shares, it's nice. Real nice. Real nice. I like that a lot. Right? AAP. See this bad boy? I got you, Mr. Ashford. Now, I want to talk to you. I've been already formulating in my head some of the stuff that you can be doing because you have some advantages over other people. See this gap down? And then you squeezed, right? So now all day you're hanging over the VWAP. See that? Hanging over the VWAP. But see, you can't short this under the VWAP. Does anybody know why you couldn't short this right there? When it broke under here? The reason you can't is that it's too extended. See, that's a $2 drop. But what's the other reason? How do you know if something's extended? Right? That's kind of a good question. How would you know if something is extended? Well, if your 9 EMA is not on top, exactly, Kasim, good. Brown people always know. That's just kidding. Good though. You're right, because look, if you're gonna short this thing here, but your 9 EMA's here, that's $1. Your 9 EMA can't be $1 away. That's too much risk. Remember, we're in the game of low risk, big return. We want to make $1 for risking 30 cents, right? Well, if we're gonna risk $1, then guess what's gonna happen? We'd have to make $3. But the other thing is that when you give too much room, when a stock is loosey-goosey, too much room between where you're shorting, where the support is, and where the resistance is, when there's too much room here, resistance, support, and where you are, you can go all the way back and forth. There's just too much room. What we want to do is be support when we're shorting, us here, and then the resistance here. So there's only place to go is there's nowhere to go. Tight basis consolidations, they give us the power. And they help us manage our risk. Like gentlemen, like men of honor. Right? So this is too loosey-goosey. So you just let it cruise. Let it cruise. Now, and look, the best ones are going to happen a little bit later in the day. Break under. See how your 9 EMA? See this time where the 9 EMA is. You got VWAP here, 9 EMA here. There's no difference. When there's no difference, there's nowhere to go. And that's where we want to be. Short here, support here. We're here, resistance here. Nowhere to go. Now down, and then it's about just letting this thing go. I don't use any stochastics intraday, just volume in these moving averages. It just makes things a little bit easier. Intraday indicators, when you use like Bollinger Band stochastics, sometimes you get just too many signals. It makes me overtrade. So guys, this is that's the way to go, right? And look, so how do you find these VWAP fizzles? Say that you're on the stock market watch, and maybe some of these are just not working. Maybe you don't like any of them. Midday, I want you to go about noon. Run a scan for the top losers of the day. These are just the stocks that are down the most for the day. I rank them in chronological order. Is it chronological? Whatever. I rank them by percentage. All right. And then what I'll do is I'll do this, 11:30-ish. And so what I'll start to do is I just run a scan to see what's down the most, and then I'll start hunting for them. And what you'll find is that you may even find other stocks that are just down a lot that are forming patterns that you like this is a bear flag, right? So like going through your top losers will give you kind of an idea of like what patterns, some of them will be bear flags, but you'll find a lot of these fizzlers like this NDSN, right? Later in the day, you fizzle back under and you'll find a whole host of them. Man, that was GameStop. And so that's it. Like we took this trade on Cena today. This and WB. So this thing like broke down, it popped up, and then right broke back above the VWAP and then back under. And I took this WB, which was it broke down. It never broke above the VWAP. It just started to round out under it. So I knew that once it couldn't, it would probably fade back. So I took some short here around 78 and just kind of I got a quick one. I only took it only dropped about $1, but whatever. You can use VWAP for longing too. I use them all the time for long. So like you can see this glycemes, right? This had a VWAP test in the afternoon. It had this big pop, and then doop, same type of day. You run them at the same type, David. Once it taps, you can buy, and then you play it back to the upside. Pretty cool, eh? CENDP, same type of deal. Nice push. Tap into the VWAP in the afternoon. It holds. Flag and then go. And the beauty of that type of trade too is you don't have to run a special scan. See this liquid gainer scan I have? It's just a top gainer scan, stocks that are up the most, and then I had a volume parameter to it. So that, you know, stocks above 1 million shares, because I don't like low volume stocks. You know, nothing too. And then, yeah, we'll look for our afternoon plays. We'll look for these consolidations or VWAP taps, and then we'll have something to play in the afternoon. Pretty cool, right? My friends, it's been real. Guys, I do these all the time. I welcome you guys to come in here. Hat change. I welcome you to come in here. Guys, we have our boot camp, our next boot camp starting in May 3rd. You guys really like it. So I do reviews like this all the time. You know, I show my students, you know, how to journal and do all this fun stuff. But we have live, our 60-day boot camp. I do live class. I get on Sunday, Tuesday, Wednesday, Thursday, 8 p.m. Eastern time. Every single class is recorded, archived for playback. The beauty is this. So I have like probably, I see a couple dozen of my students in here. My students have lifetime access to class. My students have lifetime access to class. The recordings, you can watch these forever. But the beauty is, like, I have every single boot camp archived in here. You can watch them all. You have lifetime access to this stuff. My students come in for years, even the ones that are good. Like, you know, Mike is in here. Mike's been a professional trader for 2 years. But he comes in here, catch up, pay his respects, ask questions, give support, right? People just know if it's 8 o'clock, am I going to watch TV with my wife, or am I put the headphones on and tell her I'm working, right? You can't tell her you're working, right? Nobody wants to watch Desperate Housewives at night. Is that still on? I don't have cable TV here. I'm taking Desperate Housewives. It's not on.
I'm thinking The Bachelor would be good.
It's been so long since I've had freaking cable TV. I got 2 70-inch TVs in my place, and neither one of them have cable hooked to it. Whatever. But that's the, you know, you can retake live class as many times you want. You have access to the recording. We have quizzes, archives. I do these market recaps. Dude, and we have freaking everything. You know, you need your trades graded. People put their trades on here, and they'll give me, I have, so you didn't give me access, but, you know, I have a template for the students to use for these trading journals. See this? So they can come in, they write their dates, entry, exit, and they put screenshots, you know, and then we'll trade week notes, right? And so I'll be leaving notes in these things for him. Still chasing. I don't like it. Stops too tight, you know, whatever it might be. I'll leave the feedback, and that's how you get better. See, a lot of people, they want to just jump into trading live. I made that mistake. When I got into trading, I just wanted to put money in an account, and I wanted, but I didn't really know anything. The thing about trading, guys, is that it is a job. It's no different than being a doctor, a lawyer, an engineer, whatever. It's a job. So what does that require? It requires you to go to school, right? Go to school and learn this. But guess what? Just because you spend a bunch of money and you go to medical school doesn't mean you're a world-class surgeon. You're making all this money, right? You're just gone to school. You still got to go out and practice it. So you got to go out and practice it. For our students, we put them on simulators, and you go out and practice it. Now, guess what? Just because you went to med school and you practice and you plan on a couple cadavers doesn't mean you're ready to do surgery, right? You still got to go the next step and the next step. And guess what? Even when you go pro and you've got your first paycheck, it doesn't mean that you are the best. It doesn't mean that you're at the top earning capacity that you're going to be. That requires expertise. That requires competence. It comes from repetitions. And it comes from having feedback from an educator or mentor who has a stake in your success, right? A 360-degree feedback. What am I doing right? What am I doing wrong? I have this fight with one of my kids right now. I told him right now that he's probably psychologically imbalanced because he's always fucking moody as fuck. And you know what he does now? He doesn't act as moody. Because anytime I see him, I'm like, man, you're about to go moody on me, aren't you? And he's like, no, I'm not. But sometimes you need that. Sometimes you just need somebody to tell you you're being a pussy. Big deal. What's a big deal, right? My mentors used to tell me all the time, big boy, you are just plumb dumb. Not even a big deal, right? Take it how it is. That's what we're here for, right? I'm a barker. I got a loud voice. I'm always hooting and hollering. But sometimes that's what people need. It's a big deal, right? If you want to get better, then you've got to have an elite coach. Every elite performer has an elite coach. I'm a damn good trader, but I'm a world-class teacher. I am. You know, this is what I do. You know, I enjoy it. Y'all have some fun with this damn thing. You know, we have a lot of tools and there's lifetime access. This is a journey. It really is. There's no get around it. This is the hardest game in town. It's the hardest game in town, but it's also the most rewarding. Today in the chat room, I was sitting here bitching and moaning because look at this. I'm sitting there bitching and moaning. Everybody's like, dude, what are you moaning about? And I'm sitting here bitching and moaning because I only made $1,700. And then everybody's like, dude, what are you complaining about? And I'm like, I'm sorry. Every day when I only make $1,000, I complain because I expect more from myself. But imagine that. You're fucking pissed because you only made $1,000. That's not such a bad life. The best part about trading is that you have total control over what you do. The question is this. When you're done with class, you're going to know everything you need to know about the tactics, the strategies, whatever. But you still have to go and do it. You got to be able to get these fingers to click those damn at the right time. And that's up on you. But that's where I can help you too, right? Teaching is for tactics and strategies, but coaching is for performance. And that's where I can come in and help really with a lot of those things. It's pretty fun too. I'll tell you what, anybody been in an office and had just been fucking annoyed by their next door neighbor in their cubicle? Anybody ever been passed over for a promotion? Anybody ever sick of office politics? The great part about trading and the depressing part is that when you screw up, it's your fault. I've had a lot of days. We always talk about a chat room, like, man, Kunal, Netflix, a couple wines, a cigarette, and maybe catch a beat type of day, huh? I'm like, yeah, I'm going to be hiding in my room for a while. I really fucked up today. Because when you lose, it's your fault. You're pissed. But when you win, dude, it's a good feeling because it's on you. Right? It's not about your boss, anybody else, anybody getting in your way, the politics, whatever. It's just about a man and his honor to do what's right and go out and slay it. And that's fucking cool as shit. There's no other better game. So we have classes, everything's recorded, quizzes, all that stuff. We do market recap. We put people on trading simulators. I have those students make the business plans. We have a private student community where the students can talk, ask questions. You know, they're jibber-jabbing in there all night. What do you think about this? It's lifetime access. Guys, this is my cellular. Don't give it out, but it's not an office phone number. That's my cellular. That's the one my mom calls and FaceTimes me every day. What are you doing? How come you are not married? You motherfucker! You mother bitch, I will get you. You better get married. I'm sorry, man. My mom is really intense. What are you doing laughing at me? I will get you. I'm sorry. My mom is right. I lived with my parents till I was 30 years old. I'm very close with my parents. As an Indian person, even when I had money, I'm like, Mom, I want to buy a house. My mom goes, what? You buy a house? No, you buy me house. And then you come. So when I wanted to my house, I had to buy my parents' house. I had to move in with them. It was the oddest situation. I'm like, I tell my friends, I'm like, yeah, man, I just bought this house, man. It's fucking huge. Like, it's awesome. I was like 28 years old. This is before I was even trading. You know, I was just in my job. And they're like, oh, man, you're falling out of your parents' house. I'm like, no. Well, my parents said it was for them. They're like, what do you mean? I'm like, my mom said she's keeping it. I'm like, oh. They're like, oh, man, how does that work? I'm like, it doesn't, man. You just do what your mom tells you. So then I ended up staying with my parents. And then at some point when I was 30, 31, I'm from Michigan. And I work with like my best friends. So all the guys that work at our company are like my business partners. They're all my best friends. Like I've known them my whole life. And so, you know, at one point we had just got so sick of living in Michigan. We'd all been working together. You know, they quit their job, work with me. And so it was pretty cool. So, you know, we decided to get up and move to Costa Rica for 4 months. And we just like cruised out. And so then that was like my escape. I was like, Mama, we got to go to Costa Rica for this business trip. And my mom was like, okay, are you coming back? And dude, I just never came back. And then when we were traveling around, we've been traveling for years. And then we kind of settled into Destin. And then, so, you know, I've been back and forth from Michigan to Destin for the last so much time. It's been pretty cool. So all these goofballs, these are my business partners. They help run the business. So they do the customer service, the sales, along with Mary Beth. It's pretty cool. We've had an interesting group. So these knuckleheads are my childhood best friends. This is when we were actually, you know, down there. Yeah. Anybody got any questions? Oh, good. So rarely pick the wrong ones. So guys, Kasim is asking, like, out of the gappers, how do you pick the right one? For example, it comes from the cleanest ones. So I look at the daily chart, right? So if the daily chart is not clean, I won't trade it. You know, let me see one here. So like this, like for example, I'll tell you what, like this HMNY. See this? See how the stock gapped into its daily, into resistance? Yeah, it gapped into resistance here. It wasn't a clean breakout. So guess what happened? It gapped up and then it goes through. Done, right? It's that break, that's not clean enough to go long. And the same thing, if it was a short and it gapped down into that, you know, it's not as good. So you have to just always be mindful of that. Like this other day, like this ORBK was, see, like it kind of gapped down. It kind of flushed down, but then it came back up because its daily is just too modeled. So the best ones are going to be clean daily charts. You know, and that's how I pick and choose. And I very rarely, over time, you'll kind of build up your intuition on them. You won't pick, if you stick with the cleanest ones, you're good to go. I don't have any auto traders. You know, even though I'm Indian, I'm not a mathematician. Yeah, although I create I have my own scans that I've created and my own PCFs too. And I give them all to my students and stuff. You'll see me send everybody my layouts and stuff. So like all the students in class, I give them my scans. So I send them my scans, my layouts, so you can make your platform look like mine. So this is TC2000, but I have different layouts on this. So like when I'm trading during the day, see this? This is 6 chart layout. What you can do on TC2000, you can detach this. See this? Float a new window. How fucking cool is this? See, I float this to another, or when I'm trading on my laptop, I float this to my iPad. I connect my iPad to my laptop, and I put this, so now I can watch. Yeah. so that you can detach these. So I have like all these different windows for different stuff. So like I have a different window for this. So I float it into another thing. And this one I use for scanning. And then I have the 6 windows for, and then you can duplicate the 6 windows. So if you want 12 charts to look at, you just duplicate this, you can have 12. So I give all the students my layouts, my scans, everything. Yeah, it's just easier. If I can set up your charting, it just saves you guys so much more time than sitting there fiddle with it. And then as you get better, you can change things around to suit you. Yeah, Aldo, just message me. I'll send you my layouts. Kunal 00. Hey Brian, what's up, baby? At the beginning of the webinar, I mentioned thin line between commonly improper than a month before commissions, but not after commissions. Brian, what size are you taking? Can you give me a rundown? Man, Corey, don't be so hood, man. If I say I'm gonna hook you up, I'm gonna hook you up. Don't be so hood, man. You know what I'm gonna do. I ain't cheap. You guys so damn skeptical sometimes. Shit. That's fucked up, man. Hey, Brian, for at 200, 300 shares, you should be able to take $300, $400 days if you're trading correctly. It's not necessarily the commissions that are getting you. You're not elongating your gains. Let me show you something. This is one of my students, Henrik. He trades 100. So when it's the volume here, this is the buys and the sells, right? So he had Sorrel 100 shares both ways, TTD 100 shares both ways, WD 150, 300, right? So he made 325 this day. So he does this every week and he sends it to me. WB 700 total shares, 300 total shares in NVIDIA. So 150, 350 total buy sells. But see, he took a few different trades. 531. And then he puts in where he bought, where he sold, but he's not going in big size. See, short 100, 50, 50, 50. Not crazy. Right? So you, Brian, you're not elongating your gains enough because he's not trading even ever more than 200 shares. See this? 205, 200, 680, 633, 7, 600 AOI. So that's 300 buys, but that's between multiple trades. Right? So buy, sell, buy, sell. See that? He's elongating his gains to get them. That's 637 on, dude, that's 1,000 total shares for the day, right? So you see this? He made 337 on Melly trading 50 shares. 50 shares. Think about that. So, Brian, I don't think your commissions will be a huge deal. What we got to do is just make sure that you're taking chunks. All right, and you need to ask yourself, see how I did my journal? What's the question I asked myself? Am I taking chunks? And that's where we need to get you is, are you, when you go through your week, do you ever take an $8 chunk, a $5 chunk? This is day trades. If you're not, then it's going to be hard to be profitable as your commissions will always eat up your account. Then you lost $7 on one day. So look, 56 total volume, 4,800 shares. That's nothing. Profit 1690, commissions only 15. See that B money? So he's only spending $15 a week in commissions. So what we got to do, Brian, is just get you to take bigger chunks. Hey, you know what? I do need to get to Africa at some point. I have not been because the time difference makes it a little bit difficult to trade, and I don't know the internet situation. But if you got a place for me to stay, I'll get my ass there. I love traveling. There's actually, man, there's a whole host of you guys from Africa in this place. in this webinar. My man Ashish from Uganda. How do I get such a low commission rate? So I actually have my own hedge fund. So this platform, I own it. I have 150 of my students trade in my hedge fund. So my students that trade through the boot camp, that are in the boot camp, they have the opportunity to trade in my hedge fund. And it's, it's 2,500 bucks. There's no pattern day trade rule. It's 27 cents for 100 shares. They have the opportunity to trade in there. And then I give them $15,000 per position buying power. So they have $30,000 in buying power. And then what we do with them, and the hedge fund is awesome for building traders. So all the students start off at $200 a day max loss. So I have my own essentially place to trade, right? And then there's 167 students in there. So the reason it's awesome is that I have two risk managers. I put people in place to manage the risk. So in the beginning, when a student's new, I give them a $200 a day max loss, and then a 400 share max that they can buy. So that way they don't blow up or lose more than $200 as they're getting new. Every 2 weeks they're profitable. I increase the amount of capital they can trade with, and then I increase their share size. As they get better and grow, guess what happens? I start increasing their rate. I start increasing how much cash I give them to trade with. And over time, they start building it up. So they can go from 15 to 30 to 40 to 50, as long as they're profitable and I know that they're not going to blow up, I have no problem giving more and more buying power and more share size. And, it's open for any of the students that trade, finish boot camp, but I don't open it up to just in general, because it's not really, if I haven't trained the person, then I have no edge in managing them. Like, nobody's going to want, if one of our traders is trading bad, I'll put them on a timeout. And I'll say, hey, you're going to take the day off. Well, if you're not my student, you like me to say that, right? Who wants to fucking take a day off? But guess what? Sometimes if you're trading bad, you need somebody to tell you to take a day off. Hey, I'm going to limit your shares for tomorrow. We work together, right? That's how you build. Building a trader is, right? And so sometimes you need somebody to say, hey, go fuck yourself. You're taking the day off. And then you're going to probably say, go fuck yourself back. But there's that give and take, and that respect level is usually there where it's not a big deal. Because I'm in the business of building people, right? I make money from having traders that last a long time. Yeah, Corey, it's in the bootcamp module page. Go on the module page and then go on the module page, and it's down here in the grading trades. Anybody else got any questions? Hey guys, and there were a lot of them. I'm sorry if I missed a few. I really apologize. Hey Steve, I actually never long up the 1 minutes. I only do it on the short side because stocks just drop faster than they go up. When I long stocks, I just go off the 5 minute chart. Mr. Crawl, my apologies. I'm getting late to you on that one. And guys, if you have any questions on, the fund or anything like that, you can just email me and I'll make sure to answer them. I know there was a lot of just random questions that would take more time than I have. I don't have any brokers that I really recommend. A lot of our international students use interactive brokers. That seems to be the one that all the international students use. Well, Jack was a little bit different. You know, it gapped up and then it faded all day, and then yeah, the next day it gapped down and it spiked up, and then it did fizzle, and you take that trade. I would take that trade, Michael. Like I take that shit. Yeah. George, there are payment plans available. Message me. I'll set up a call and we'll work some out. I'm not too worried about that. I'm not a huge stickler on that stuff. Hey, Nicholas, one of the things with trading is it's just a process. I actually don't wear my underwear when I trade anymore all day. I take showers and try to dress normal. I actually, believe it or not, I made more money trading at my job than I did my first year trading at my house. Because when you're at your job, you're like super structured, right? You shower, you get there, you have your coffee, like everything is ready, and then you're like super organized because you got to trade. When I started trading from a house and with my parents, dude, I'd be up all night, 2, 3, 4 in the morning doing all sorts of weird shit in my room. And then, dude, I'd wake up, in my underwear. I did like freaking Doritos in my chest hair, and I'd roll to the computer. And, I had the chat room at the time, the Bulls on Wall Street chat room, but there's no video there. So I'd just be sitting around in my underwear, combing the Doritos out of my chest hair. And, dude, I was not making any money those first few months. I thought it was going to be so easy. I thought that leaving my job would make me make more money, but it made me a lot less because I treated quitting the job and working from home as like my retirement. Like, I've made it, I've retired. And, and so what ended up happening was I just didn't, I needed that routine. So once I put that structure in place, like shave in the morning, shower, I know you're joking, but I was just kind of giving you my story of that. Once you get the routine of just kind of shave and shower and taking a walk, doing whatever, giving yourself a little bit of time in the morning, your trades will be a lot better. Hey, Mr. McCoy, I haven't actually used Short Trader before. I'm familiar with the platform, Dash Trader. I've used that before, but I'm not familiar with the mechanics of using them before. Dun, dun, dun. Hey, C-Car, Mr. Gupta, ¿cómo estás? Wait, you're Indian. What's up? C-Car, I'm a beginner in working how day trade can be managed. So when you're working, I do tons of swing trading. I did more swing trading when I was working than day trading. There's no different money than swing trading than day trading. So you're trading longer term charts. I'm probably a better swing trader than I'm actually a day trader. I learned how to swing trade originally. One of the things to do is kind of structure your day. Like if you have time in the morning, then just trade that morning when you're focused. If you have time end of day, then take that hour and do it end of day. But try to find periods of time where you have the ability to actually go in and focus. Because otherwise, when you're multitasking, and your boss is like, "Hey, can you do this?" It's super hard. When I was at work, and I used to have all these meetings in the morning, and I used to sorry for swearing. I used to have these meetings, and I'd always be like in some stocks, and I couldn't even listen in the meeting knowing that these stocks are going up like thousands of dollars or down thousands of dollars. And you can use stop losses, but I was just so curious. So I would always go to the bathroom during the meeting. So then after like 3-4 times, like people were like, "Dude, you're in the bathroom for a while." So like I had to like fess up in the meeting, like, yeah, I was taking a shit. And everybody's like, you're not supposed to say that. But like I needed to shock them, right? Like, because once you say the word poop, like everybody's like, oh, cool. All right, like go, you're going to the bathroom. So then after a while, I kept doing that. So I did that for like a few more weeks. Everybody's like, boy, these morning poo-poos are really taking some time. They're like on the regular. So then I had to come up with this scheme where I told everybody I had IBS, irritable bowel syndrome, from that movie Along Came Polly. And so then I had to fake having this IBS for a year. So like we'd be out to lunch and I'd be like, dude, I totally forget sometimes. So I'd be eating these like hot wings and everybody would be like, you're IBS. And I'd be enjoying them because, dude, nothing can break my stomach. And everybody's like, Kunal, you're IBS. You can't eat those buffalo wings. And I'd be like, oh, yeah. And I would have to like run to the bathroom and pretend like I had to take a dump because everybody thought I had IBS. And so that would happen all the time. We'd be at the Christmas party. I'd be doing something. Everybody would be like, Kunal, you're IBS. Because I'd forget because I was caught so deep into this irritable bowel syndrome lie. Oh, man. I was living a double life. IBS is a serious thing. So that is... that's where trading at work can get a little bit dicey. So CCAR, find some times where you can trade and, try to schedule your time a little bit. I don't personally use half dollar, full dollar type stuff. No, I haven't done that yet. I do. I mean, you will see it sometimes, like, stocks will fall, be stuck around those levels. So, it's kind of in your mind, but I don't base a strategy around it. I use Bollinger Bands on my daily charts. I just keep them real light, just in case. I use them as basically like, I don't use them all the time. I just use them in a specific instance for a specific pattern. Hey, Shahid, for my swing trades, I use hard stops. If it's a really quick day trade, I tend to use mental stops. But, you can use, even for the stocks we're day trading, you can use physical stops. It'll give you some ease of mind. Hey, Roman, Forex is a little bit different. So I know how to trade Forex. I've traded the GPB, the British pound, and the Japan. They don't move around as much. It requires a lot of leverage. Look, sometimes you'll catch these kind of flushes. There's certain times that the market moves around, and there's certain times they don't. You'll see some of these times these things are kind of trending, and you can do this stuff, but I just don't find the action fun enough in Forex. They don't move around as much. The action in stocks is just so hot. There are days in stocks that you can catch a stock and they can just make monster moves. It's cool. It's fun. I know how to trade futures. I've been trading Bitcoins lately sometimes at night and shit. Dude, that's fun. You want to trade something wild? Trade the ETH. That's like the Bitcoin offshoot. It's pretty cool. A different skill set, but I use the same patterns. I haven't been trading weed stocks, Nick, because they're mostly penny stocks, and that's not my cup of tea. I don't like doing the penny stocks. I don't find there's much money in penny stocks. PDL, I'm not sure about this. See how these blocky candles are? It makes it hard to day. You can't day trade this thing. Yeah, Roman, probably $2,500 is a good start. Hey, Ashanta, my students use the TC 2000 paper trader. And I'd start off with a reasonable amount of cash, whatever you're going to start off with. And then, dude, it's pretty easy. Like, you can add this order bar, and then you can add it into, like, wherever you want in your thing. Then you get out of here and you can buy and sell and do all that. Yeah, you know, if you want TC2000, if you sign up if you go on our blog, there's a link here. When you sign up for one of these, so they got a $10 plan, $30 plan, $100 plan. It'll get you my scans and layouts. You know what, Samuel? He's a good friend of mine. You know, he knows how I am. He's actually one of my good friends. We're at the same age by 2 days. Yeah, you don't need much when you're intraday trading. You don't need too many things going. I mostly use the 9 EMA and the VWAP. And 20 EMA. Hey, Rosa, you got to use, when you're trading, don't buy Bitcoin up here, most likely, by the way. You know, you don't want to be chasing anything higher, but I have accounts at this place called Gemini to trade the Bitcoins. Look at this thing, man. It's up $200 the last few hours. How nuts is that? And the other one I've used, I got accounts at 2 of these places, at GDAX, which is Coinbase. Thing looks like it's about to break out. Hey, so you can use the setups on options. You just want to, basically, you look at the options, wherever you think the breakouts and breakdowns are, you're kind of moving the options around those prices. You know, you're adding another layer of complication on it. Trading is complicated enough, but you can do it. Well, Rosa, you know, they drop down 30, 40% every blue moon, so you'll have time. I day trade these things. I've been using more. I've been doing the ETH. I got this thing at this flag pattern right here. Not much, like a couple $1,000 worth. I don't know much about this yet, so I'm like kind of trying to figure it out and learn. The thing about trading, so the style of trading I do is just momentum trading. You can apply it to any market. So I can do futures, Bitcoins, whatever, man. It's all the same shit. You know, I didn't like the PDLY for day trading because I didn't like the way these candles are, but I mean, I see what you're trying to do. If it breaks here, it's going to go. Hot damn. Anybody else got any last questions? And guys, if I miss it, just email me, Stephen Chan. I can give you a call. Send me your contact info. I'll get a hold of you. Hot damn. Guys, it's been fun. It's been real. It's been awesome. I shall see you. We shall do this again sometime. Be bold, be great, be awesome. Remember, all the time, baby. I love you guys, man. I will see you guys soon. Peace. Classmate questions. Peace.